What's up, everybody? Hope you're all doing well. Today, I'm going to go over all the trades I took this past week. This past week was I would say it was good, but at the same time, I think like there was some sort of emotions came in certain scenarios, right? So like we're going to we're going to address that as well. There was some FOMO happen, there was some over trading happen, things that shouldn't have happened. These things. I mean, sometimes it happens, like every week is not going to be a picture perfect week. Some weeks you're going to, really get married to the analysis. So we're going to go over a couple of those things over here. So starting off, we're going to start off with the first trade of the week, which was a pound yen buy. This was a buy taken around 4, 5, 6, a little after Asian session, right? So let's take a look at this right here. All right, so this first trade, this shouldn't have been taken at all, right? I'm not sure why I took this trade. This was in the close to midnight Eastern time. So basically what happened was, if you go down to the 15-minute time frame, we're going to go down to 15-minute time frame and let's go right over here. I guess the whole situation was the high time frames were bullish and was looking for buys on pound yen. Notice that pound yen basically ranged in the Asian session. So as soon as this candle, it started to break the high of the previous candle, I was under the impression that, okay, you know what, I'm going to take a buy at this point. I'm going to put a stop loss just below the previous candle and expect it to continue moving during London session, right? Because we were moving into pre-London, because this is midnight, pre-London is around 1 a.m. Eastern, 2 hours before the London Open. We were moving into that scenario. So I was like, okay, you know what? I'm going to trust the volume in pre-London to continue price moving up. And at that point, I looked at my time. I'm like, okay, you know what? This is not the right time for me to trade. So I closed the trade out. So if you can see right here, I closed it. The trade was open around 869 and then basically closed it around 830 right over here. So, practice discipline. Identified that this is not the right time for me to trade, even though I was in a drawdown. I closed out the trade because if I would have kept the trade open, it would have hit my stop loss anyway, right? So, manage myself. Discipline right there. All right, so the next trade, this was a US 30 trade I took. This was a buy trade I took. This was just like, I was trying some things on a zero point 0.5 lot. So if you can see right here on Dominion Markets, US 30 is DGI USD. Let's go over to the US 30 chart right here. So this buy was actually taken as the 4-hour candle was breaking above the previous candles on the left hand side. Because we were bullish on the daily time frame, weekly time frame was also bullish. The main bias on the high time frame was this daily candle breaking the high of the previous daily candle. Because look, this is what happened. We had the daily candle move bullish. We moved bullish, move bullish. Next one went bearish, right? So when the next one went bearish, this means we've created a high at that point. So let me remove this yellow line here, right? So this means we created a high at this point. Price retraced, and then we had a bearish candle closing with a big rejection, right? If we had a big rejection, the next daily candle, if it broke the high of the previous bearish candle, this means there's a very high probability for price to continue moving bullish to at least to the zone right over here to the left hand side. But decided to close the trade early. This was an overnight trade and took profits there and then called it a day on US 30 at this point. Now, the 1st of June and the 3rd of June were hilarious. Now look, the next trade, it was a sell on pound yen, and let's go to pound yen over here. Let's go to pound yen. This was a sell trade on pound yen. This was taken right over here, right? The sell was taken at this point around 10, 11, 12. Before pre-New York, a little before pre-New York. And this was taken only because of the fact that we had a support right here, right? So we had a support at this point, and this candle broke below support. And when this next candle started, that's where the sell was executed. So if you look at the price over here, this was executed at 325 right over here, 325. I think one mistake made over here was that so if you look over here, the sell was taken at this point, price went up and basically closed first position around 367 and then the entire position around 386. So see right over here, we closed the position in a losing trade right here, 155, 371, yeah, somewhere right over here. 371 was right here. Okay, yeah. So the main problem was that once this candle closed below support, what I could have done is I could have waited for the next candle to break the low, right? I didn't wait for the candle to break the low. Next candle went back up, closed the trade. Actually, it actually went back in the range. And then we're looking at that, okay, if we had a resistance right here. Oh, let me get something better. Let me get a box over here. If we had a resistance right here, and if we had a support right here, and candle broke support, next candle went back in the range, what does this mean? Right? This could be a fake out, right? If this is a fake out, and this is how you identify fake outs. For a support to be held, candle broke below support, next candle went back in the range, this means that price tried to break down, but it didn't have enough volume to continue down. So then there's a high probability it's going to continue on to the next resistance, and then it might break out the other way. And since we have clean ranges on the left hand side, we may continue up to fill the range. Now, this was the whole idea after the candle closed back in the range. So then now you're going to see a bunch of arrows right here on the candles, on the candles that closed back in the range. This is where we executed buys. I mean, I executed buys, right? So my normal risk per trade is around, I would say like 2%, 1.5%. I use around 20 lots, 15 lots. So the next trades were basically $2 lots, right? So you can see right here, $2 lot, 1, 2, 3. Three $2 lots were entered at this point, right? So we're going to go over them one by one. So take a look at this. 15-minute candle closes back in the range. Next 15-minute candle closes bearish, but it closes within that range still, right? And when the new 15-minute candle started, the first entry was taken at 155.422. 422 right here. This arrow was the first entry at this point. This was the first entry was taken at this point. And then basically, so the idea was that now we were using dynamic risk, right? Dynamic risk means that you add positions to the trade as the trade goes in profits, or as it's in drawdown. So the whole idea was that, okay, if I'm going to open a total of 14 lots, that means I can open 7 $2 lots, right? So what I wanted to do was I wanted to have some more confirmation, but at the same time, I wanted to be in the trade early in case it broke up, because we had this fake out over here, right? So entered the first position at 422, entered the third position at 441, right up over here as the 15-minute candle closes bullish, because if we're closing bullish, rejecting this support, this means there's a probability we may continue up to the resistance and then break up, right? And then added the third position at 422 again, right over here on this next 15-minute candle. And then you can see the next candle went to resistance. And now when this candle went up to resistance, we anticipated the candle after that right over here. So this was around 11, 12, 13. So this was at pre-New York, right? So now we expected the pre-New York candle to break the high of the previous one and continue moving up. But look what happened. Next candle came down, closed the first position at break even. You can see right over here, $1 profit, and then closed the other two positions at, one at 18, and that's it, right? That's it. So this buy trade idea was basically a break-even trade, right? Even though you see 1, 2, 3 positions here, these are all dynamic risk entries, right? And this was at basic break even. Nothing happened. So we took one trade for a sell, and this was a losing trade right over here. Second idea was a buy, which was at basically break even. So now we had room for a third trade, right? So in my head, I was like, okay, you know what? Let's try to take a third trade at this point. So the third trade was taken with a regular lot size. Now, it was a smaller lot size. Wanted to add positions as we move down. So this was a sell taken over here at 305. Right over here, 305, right? As this candle broke the low of the previous candle, anticipated price to continue moving down, 12, 13, 14. So this was still pre-New York Open, right? Expected the candle to move down, and it basically, it moved right back up, and I was like, okay, you know what? If it's moving up, it's basically respecting the support. So may want to close the trade, and closed out the trade. Basically lost confidence, right? And I think the main reason I lost confidence there was because of the fake out not working out. So basically lost confidence and just closed out the whole trade and managed risk, and it is what it is. And then I tried a third attempt at the sell. This was a 15 lot, and I think I used a 15 lot at this point because we were moving into a time when we're moving closer to New York Open at this time. So since we're moving closer to New York Open, in my head I was thinking that, okay, if we're moving to New York Open and if the previous 15-minute candle closed bearish, now if this candle respects the high of the previous one, I think there's a possibility we can continue moving down with volume, because we're moving in a time when there's going to be volume in the market. So that's what we did. That's what I did. Sorry, took a sell at 300 right over here. You know, as this candle broke the low of the previous candle, took a sell. Price went down to almost 8 pips, 9 pips. Wanted it to continue down further to like 155, 100, but you know, held on to the trade. Price came back up and basically just managed my risk and closed out the trade. That's all what happened. You know, just managed risk, close out the trade. You can see this wasn't a big significant loss at all. Then after that, I took a last trade. This was a sell on gold. Let's talk about that over here. This was sell on gold. Let me see if I can find it on the 1st of June. This was right over here on the 5-minute time frame. Right here. This was the sell on gold taken at this point. So let's just break this down on the higher time frame here first, right? So let's go over here. Go to the okay. So this was a sell on gold taken right here. You see this big move down? This was a sell on gold. Basically, so the time here, this was at 14, 15, 16, around pre-New York Open. This was after NYC Open, right? NYC volume pushed down. So basically what happened was 4-hour candle broke the lows at this point around, you know, 1901, 1900. And we have clean candles moving all the way down to the left-hand side till 1891, right? So now when we go down to the 1-hour time frame, let's go down here to the 1-hour time frame. Let's go to the 1-hour chart. This was right over here. Yeah, 1-hour time frame was also coming down. So now since price is coming down, and we had a clean so now notice on the 1-hour time frame, it's a little bit choppy at this point to the left hand side, right? So I focused on the 4-hour volume coming down with NYSE open, right? And also the fact is that we had really good NFP awaiting for us on Friday. So the whole bias for gold was bearish because we had really good NFP awaiting on Friday. And with the good NFP awaiting on Friday, normally gold prices that in, right? This means that if we know that the NFP is going to be good, earlier on in the week, gold is going to continue moving down to say that, okay, if it's going to be good, we know it's going to be good, so let's just start heading down now. You know, why wait for the news? That's what we've seen in the market. So when price was coming down, the idea was price to come down towards, let's say, 1890. This rejections here to the left hand side. So this was the idea, 1890. So now I had to decide that, okay, where to really execute the sell, because we were coming down, we had room to go down. So now look at this, right? Looking at the 30-minute time frame here, we can see that this was the NYSE open, right? This was the NYSE open around, no, oh, sorry, this was a London close. This was around London close, 14, 15, 16, 17, yeah, the time is different here. So this was around London close. London close had a lot of volume. We moved down at NYSE. London close candle started. London close candle started moving down. The whole idea was that can we continue down towards, you know, at least 1893, 1890, because this is where we had the support at this point. So let's go down to 15-minute time frame. First is right over here. Was looking at the 5-minute time frame. Yeah, okay, this was the 5-minute time frame right here. So you got the 5-minute candle close below the support, right? So whenever you're looking at gold, gold moves with a lot of volume, right? There's a lot of volume in gold when it starts moving. So the best thing to do is to look at the smaller time frames, because in the higher time frames, you might just see, you know, big candles moving down with like big bodies, you know, but when you look at the smaller time frames, you start to see some market structure. So this is what we saw right here. Look, we had a move down right at the beginning of the London close hour, started consolidating on a 5-minute time. But look at this, right? This kind of rejection, this candle went down, broke the low, but it's still closed at this point. Next candle created support, right? Now a support has been formed. And then a 5-minute candle broke below support. When we broke below support, and when we know we have clean traffic on the 4-hour time frame, 30-minute time frame, we're at a high volume hour, this is where the sell was executed right at this point when the candle started. The stop loss was at 1897.86, 1897.86. Let's see here, 1897. Oh, okay. Oh, yeah. We moved the stop loss to break even. That's why it's at 1897.86 right at the entry point. So basically, the stop was kept above the previous, 5-minute candle, and anticipated price to move down. So that's what happened. Price moved down and just secured profits there. So this this whole thing was done on the first day of the month, right? First day of the month, really got attached to the charts. I think one reason why I went a little bit overboard with trades, because had a really good month of May, extremely good month of May, so was riding off of the high of month of May, right? But at the same time, as you saw, I managed risk. Things didn't really get out of control too much. So let's take a look at this next. So this was on the next day. This was a gold sell we took on a 10 lot. This was a losing trade. Let's take a look over here. So, okay, so this was a gold sell right here. This was basically on the 5-minute time frame, right? This is really easy to see. I mean, candle broke below this area of support and anticipated price to move further down towards 1891, 1890. I think the mistake is simple. The mistake was that, this candle closed below support and entered the sell on that candle, anticipating it to go down, but I guess it didn't. It just went bullish. Even if the sell was taken when this 5-minute candle broke the previous low, it would have still been a losing trade, because maybe the probability wasn't there for price to continue down, and it is what it is. Let's take a look at this on the 30-minute time frame here. Yeah, 30-minute time frame. See, so yeah, I guess that sell was taken in a rejection zone. But I mean, it is what it is. Basically, anticipated price to continue moving down towards this area. 1892. But I think what we can take away from this is that even though price came in a potential rejection zone, could have been looking at buys at that point too, right? Because we were so focused on sells based on the good NFP numbers that were awaiting us on Friday, didn't really look at the buys. So I think in future we may want to try to see that, okay, if the sells didn't work, how can we position ourselves to take buys for price to continue up? So that's something I can take away from that loss over there. Next, this was actually a buy trade taken on gold, basically for a small price. This was taken right over here once we started breaking above. I think this was taken on the 5-minute time frame. So if you go to the 5-minute time frame, yeah, it was taken right over here. This shouldn't have been taken at this point. This was taken at around 12, 13, 14, 15, around NY Open. Right before NY Open, this buy was taken, and this buy was taken as a FOMO trade, because already missed this move up. So a FOMO was taken right over here, a buy, and you can see this was a buy at 1905. Price went up, and basically wanted to close around 14, 15 pips, but held it longer, anticipated to continue moving bullish. One mistake was didn't secure profits, right? I did not secure profits, and I paid the price for securing tiny bit of profit right over here around $380. Was it $380? No, it's right here. Yeah, 480. Okay. After that, we had a buy trade on pound yen. Let's talk about that buy trade over here. This buy trade was pretty simple on pound yen. There was no confusion. It was actually really, really smooth. Played out exactly how we expected it to play out. Let me just draw my zones right over here. This was taken around, this was on the same day, on the 2nd July. So this was taken at exactly 12, 13, 14, 15, NY Open. NY Open. This was taken at NY Open at the 8:30 a.m. Eastern, around 8:30 a.m. Eastern. You can see it right over here. At 155, 370, stop loss was kept below that previous candle, around below the current candle that broke out. Because look, this candle broke out of the resistance, right? On the 15-minute time frame, this candle broke out of resistance. Next candle, once it broke the low of the previous candle, took the buy, kept stops below the current candle, anticipated to continue moving bullish. It moved up around, I would say, 7-8 pips, secured around 90%, and then closed the rest around 100, like 11 pips at that point. And as we closed position, price came down. See, so you got to secure profit. So yeah, that was a pretty good win over there. Was pretty happy about that. Second trade, I mean, and then there was another buy taken on gold. This buy was taken on gold around 13, 14, 15, 16, around, like closer to the London Open hour, the same hour we had yesterday on gold, the previous day, like on Monday, right? So this was taken right over here. This was taken at this point. So let me remove this zone we drew here. So basically what happened on gold was that we created a resistance, right? Earlier on, we created a resistance, price was respecting this area, and then we had price moving above this area, right? We moved above this area. Now the whole idea was that, okay, if we're moving bullish, let's continue moving till like 1910. Let's continue moving till like 1912, 1913, based on a daily and a weekly time frame. So that's where the buy was taken. We had 5-minute candle closing above resistance. Next candle closed above this area, and this is where the buy was executed at this point. Price went up, made the same mistake again, did not secure profits. So look at this, right? Price went up, did not secure profits, was in profits for about 20 pips. Price came down and basically closed at, like a minor win at this point, because look, we opened at this area, closed around, like 10 minutes later. So it is what it is. And yeah, what was this right here? 76, 66, 78. Yeah, I mean, could have secured more, but it is what it is. And then we moved on to the next day. Called it a day at that point. So that day took 1, 2, 3, 4 trade opportunities, pound yen and gold. So now moving on to the third day. Now the 3rd June was a pretty this was a really interesting day, right? I think the third was ADP, right? Yeah, the third was ADP. So this was ADP. This is when we were expecting gold to continue moving bearish. So let's take a look at this on the 4-hour time frame, right? Let me show you guys here. So the 4-hour candle formed at this point. This is where the next 4-hour candle closed, and this is the 12, 13, 14, 15. This is the NY Open 4-hour candle right here. NY Open. So we expected gold to continue down towards 1875, because here's what happened, right? On Thursday, we had ADP, and on Thursday, we had unemployment claims. So ADP came out really positive, right? Let's take a look right here. So let's go to forexfactory.com. Let's go towards calendar. Let's see right here, right? Look at this. Thursday, we had ADP 978,000. Really positive. Unemployment claims, way less, really positive. Everything was positive, right? So when things are positive, we anticipated that, okay, if everything's positive, gold should continue moving bearish. We're like, okay, perfect. Let's start looking for sells at that point. So this is what happened. I mean, it was pretty choppy, got caught a bunch of times. So this is the whole deal. On the 1-hour time frame, we had created a support, right? Now, the whole idea was that if this, let me see here. So if this 1-hour candle is closing and breaking below the support on the left-hand side, the next 1-hour candle, this is the NY Open, right? So let's see this time over here. NY Open, right? NY Open 1-hour candle should essentially continue moving bearish. So if we look to the left-hand side, we need to see what do we have here to the left-hand. So if we look to the left-hand side, we have a wick fill right down till 1882. And if you break this area to the left-hand side, we have a range all the way down towards 1874. This was the whole idea. Can we get that move down? So as you can see, we tried a bunch of times over here and got caught here. So let's talk about this here. Let's talk about this disaster over here. So I'd call it a disaster. So first trade was a sell on gold that was taken at 1892 right over here. As this 30-minute candle broke below the wick to the left-hand side, executed the sell, price closed back in the range, right? As the 30-minute candle closed back in the range, I closed partial positions right here. The next 30-minute candle went bullish, closed another partial, and then closed another partial. So realistically, my stop loss was pretty big on this. It was around 30 pips. So I was risking around 5,600 on this trade for price to continue moving to make a whole lot more, but basically managed risk and lost less than what I basically anticipated to risk. So now closed out 3,500, and I mean, you know what? And then things start to go down in my head. I was like, okay, you know what? We had to go down. We have to go down. So how can I make sure we can go down? So this is what happened. Then took another sell. Oh no, this was a buy on pound yen. Let's talk about that buy, because we were looking at pound yen at the same time too. This buy was actually, let's see here. This was a buy on pound yen around the 3rd. Let's see here. This was right over here. This was right over here. Right at this area, 155.805. 155.806. Okay, so before we talk about this buy on pound yen, I want to talk about a buy on pound yen that we had as well, which was a $1,600 profit, right? So let's talk about that. So this was taken around 155.512. So this was an overnight trade. Yeah. This was an overnight trade, right? So let's talk about this buy first on pound yen, and then we're going to come back to gold. So looking at pound yen, this was the whole scenario. 4-hour candle was moving bullish. We had this resistance formed right here on the 4-hour. You can see this wick. You can see this wick right over here. So the whole idea was that if the 4-hour candle can break the wick to the left-hand side, then there's a very high probability we can continue bullish in this clean range to the left-hand side. That was the whole idea. So place the buy stop basically on pound yen. Let's see here. This was, we got to go more to left. Okay, so place the buy stop right over here. Around 155.512 had a buy stop. Stop loss was around, 17, 18 pips at the same time. Place the buy stop, so you can see right over here. Price went up. Price broke above this area around, I think this was 8, 9, 10, 11. 8, 9, 10, 11. 11. I think this was after London Open. After London Open, we broke above this area. I woke up 1 hour before the live streams, closed out partial positions. Price went up, closed out more partials. And then basically what happened was, if you look on the 30-minute time frame, I actually added a position, and this is where the position was added. So you can see right here, this buy on pound yen, a 10-lot buy. This was added right as this candle broke the high of the previous candle. Now, this was a dumb move, right? And the reason why this was a dumb move was because the previous candle closed with no wick on the top. And when the new candle broke the high, I was like, okay, you know what? I'm going to add to this winning trade, and then essentially we can continue moving up till 156, because we have clean ranges to the left hand side. We can move up towards 155 900, to say the least. So that's where that buy was executed. Price came down. I realized that I made a dumb mistake, so I closed out that trade in like a 3-pip drawdown. Closed out that trade, and then this buy that was running overnight, it got stopped out at almost, I closed it out at almost break even right here and called it a day. So now let's go back to the gold sells. Right now, let's go back to the gold sells. Now, this was the first gold sell, took right here, didn't work, and then took a second gold sell. This gold actually took a second one right here. This was a 2-lot sell, right? So wanted to use dynamic risk on gold. So executed the sell around, this was 1891.77, right over here. This arrow right here took a sell, price went up, closed minor bullish candle, closed out the trade. I was like, okay, you know what? There's no reason to hold it. I closed out the trade. Then took another sell as this candle came down, because here's the thing. Once this candle formed, right, this candle was closing like this, and once it broke its own low, I remember now, once this candle broke its own low, entered another sell. This was a 20-lot sell right here, 1890.59. Took this sell. This candle went up. The new candle formed, almost came to my stop loss. I closed this trade in a $4,600 loss. At this point, I had just got married to the analysis. I got married to the analysis because here's what happened at this point, right? So if you look at the time, this is 8, 9, 10, 12, 13, 14, 15. This is when ADP news came out, right? And ADP news came out really, really, really positive. It came out really positive, right? News came out positive. I executed the sells once, didn't work. Executed sells the second time, didn't work. Third time that didn't work. Now we had confirmation. We had amazing positive news for ADP, and we have amazing confirmation for price to move up. So took a sell as this ADP news candle broke the previous candle low. This is right over here, right? Executed the sell, had no stop loss, had a mental stop loss actually. Price went in profits for about 26 pips, closed out the trade right there, right? And as that trade was closed down, anticipated another sell because this was riding off of the really good unemployment news and moving into 13, 14, 15, 16 and moving closer to NYSE open, right? The sell was taken as the candle broke the previous low. The stop was kept above, this current candle, the anticipated price to move down. So if we look at this on the high time frame, let's take a look at this on the 1 hour time frame here. So let's take a look here on the 1 hour time frame. You can see here to the left hand side, actually on the 4 hour time frame, we continued moving all the way down towards these rejection areas on the 4 hour time frame, right? And even though when we have consolidation to the left hand side, you got to understand whenever there's consolidation to the left hand side, there's only one or two ways as price is going to move through that consolidation. The first way is going to be it's going to move with a big volume candle, which we had right over here. Especially volume was coming in from really good ADP news again, really good unemployment news again, really good and that news gets absorbed into the market around NYSE open, and it really created that volatility for gold to continue moving down. So and then we had clean move down across consolidation to the left hand side. So I think it played out really well. So I was pretty pleased with that. Part of the confidence came from the fact that I had a really good month of May. So that's where a little bit of confidence came from to really overtrade. I mean, wouldn't really recommend it, but I think experience played a lot more role in it. Also, broke down my entire thought process here too. All right, and then we had finally the last trade. We had the last trade of the week over here. And this was a buy on on gold, right? This was basically easy trade. This was NFP, right? And the whole idea was to have a buy stop above the previous candle on the 30-minute time frame and had a sell stop below the previous 30-minute time frame. Had a buy stop got activated, price went up 24, 25 pips, secured profits, and called it a day, right? So hopefully this was a little bit educational. I talked about some mistakes I made, talked about some FOMO, talked about some marrying the analysis and really trusting the fundamentals behind certain moves that happened. But at the same time, I would encourage everyone to go over your weekly performance, right? Go over all the trades you've taken, go over all the losses you've taken, and try to break down those trades and see what happened, right? So I do this every week. Every week, I go over how my week went. I go over especially my losses because in the future I don't want to have any more losses, right? So thank you for tuning in. If you watched the whole thing, I appreciate it. The live streams are unfortunately they will gonna stop till the 21st June, right? Take care, everybody. Have a great weekend. We'll see you soon.